Hi everyone, welcome back to the channel. If you are new here, my name is Franklin Kabaka, a finance and tax professional at Ekaita Consultancy, and I am passionate about helping individuals and businesses in Kenya understand money matters better. Today, we are going to dive into something that many taxpayers overlook, and that is installment tax in Kenya. If you are self-employed, running a business, or earning rental income in Kenya, this video is a must watch. Let's get started. So we start by asking ourselves, what is installment tax? Installment tax is an advance payment of your annual income tax broken into 4 payments during the year. So instead of waiting until June or the sixth month after the end of the financial year to pay it all at once, KRA expects you to pay it in parts as you keep earning the revenue or as you keep earning during that particular year. In addition, this applies only if your tax liability is Kenya shillings 40,000 or more, and you should not be on the pay as you earn tax regime. So after all that explanation, then the next question is, who is eligible to pay installment tax? And the first person to pay installment tax is if you are self-employed or you are running a small business, you are supposed to pay installment tax. If you are earning rental income, you are also required to pay installment tax. If you are a lawyer, you are a doctor, you are in any form of profession, you are also required to pay installment tax, including consultants. And also, it's obvious that if a company, if you have a corporate company, you also require to pay installment tax. So installment tax is all about tax planning. Therefore, as an investor, as a business person, you need to plan your taxes well and much in advance to be successful in this. If you are still watching this video by now, I know you're wondering, how do you estimate or how do you calculate installment tax? It's very simple. Installment tax is estimated by using two approaches. One is prior year approach, and the second one is the current year approach. In the prior year approach, you simply take the previous year's tax payable and you add 10% on top of it. So that becomes 110%. So the figure you get, you divide it by 4 to get the actual installment tax to be paid for that particular year. The second approach is the current year basis, which you only estimate your incomes for that particular year. For instance, maybe you are running a business and you expect, maybe you're looking at your revenues, you are looking at your incomes, and you estimate that at the end of the year, you will pay taxes worth 1 million. So you estimate your installment tax based on that 1 million. And therefore, what you do, you simply apply the correct tax rates to that 1 million and get the required installment tax to be paid in the current year. It's as simple as that. But something else, if you are starting business for the first time, or if you are running, this is your first year of business operation, then it's advisable to use the current year basis, because ideally you don't have the prior year tax liability or tax payable to compare with. So for you, if you are starting the business for the first time, the current year basis would be suitable for a person like you. It's as simple as that. After estimating your installment tax, the next process is now the payment. But before we move to the payment, you need to know that installment tax is paid in 4 equal installments, and the first installment falls due in the month of April or the fourth month after December. That is, if your year ended in December, then your first installment is due in the month of April. That is the 20th. The next installment is due in the month of June. 20th of June, that's when the next installment is due. The third installment is due in the month of September. That is 20th September. And the fourth and last installment is due on the 20th of December of that particular year. So you have to mark the dates. You need to know that your installments are supposed to be paid in 4 equal months and adhere to the correct deadlines. 20th is the deadline for every installment. That is for April, June, September, and December. Failure to that, it will start attracting penalties for late payment of installment tax. Let's talk about payment now. This process is done on the KRA iTax portal. First of all, you log into itax.kra.go.ke. You go to payment option and select installment tax. After that, you generate the payment slip that will have instructions on how you can pay either by M-Pesa or you can pay through the bank. And that's how installment tax is paid. And that's a wrap on installment tax in Kenya. I hope this video helped you understand on how to stay compliant, save money, and avoid last-minute tax stress. If you learned something new, please like this video, subscribe, leave a comment with any question or a topic you'd like me to cover next. Until next time, keep growing financially and stay tax smart.